What's going on with Trade Desk, ticker TTD? The stock was almost $1,000 a share, and it's now about $550. It was below $500, a 50% drop from the highs. Now, I brought this stock to YouTube back in 2019. It's one of my holdings. It's a top conviction pick. But what's going on with this stock? Let's do a highlight type video. Let's dive into the last earnings call. Let's look at what the risks are, what the prospects are for the future. You're going to want to see this one. Stay tuned. Let's take a look real quick at the investor relations page here on Trade Desk. This is the most recent earnings. This is from May 10th. So this was reported in millions. This is 3 months ended March 31st. You can see a nice pop from 2020, 2021. You got 160 and 219. The EBITDA, you got a nice pop. All these numbers are really solid. You've got some great information here, a partnership with Walmart. You see collaboration with Fubo TV and others. You see raising guidance. You see a 10-for-1 stock split. Everything is positive here. So what is going on? Okay, so the first question, why did the Trade Desk drop so much after earnings? The answer, cookies are going away. Investors are spooked. Investors do not like uncertainty. So what's the answer? Well, the Trade Desk is doing Unified ID 2.0. Now, this is an open source framework. It uses encrypted email addresses. It discloses the benefits to the consumers. And the Trade Desk claims that it gives greater control for the users as well as their personalized data. The Trade Desk also claims that it gives greater transparency once you opt in, and advertisers can personalize this experience more to you. So it's going to give you better ads that are relevant that you might care about. Now, this could be better than cookies, but it could fail. And of course, that's a risk. And I think really, honestly, if you want my opinion, I think it's misunderstood. I think it's overblown. And it's probably blown way out of proportion, but the reality is the market doesn't care. The market does not like uncertainty. So that's really what's going on. So here's what's going on with the Trade Desk, though. In terms of future prospects, we've got over $1 billion, about $1.14 billion of revenue in 2021. The Trade Desk is a leader in programmatic advertising, which really is where the industry is headed, period. The Trade Desk will be a huge part of the secular growth trend, regardless of what's going on with these cookies. I really believe that. And you also have to remember that not all digital ads use cookies anyway. It's just a percentage of their business. In fact, CTV, that's connected TV, doesn't even support cookies. So I think you have just a little bit of a knee-jerk reaction that happens a lot, and usually it's an opportunity. So I've been long in the Trade Desk since 2019, and I added some shares under $500. But what you care about is, well, now it's $550. Is it still a buy? Here's some information, and you can make that decision on your own. I'm just here to present the information. I can't tell you what to do with your money, but some of the highlights here. So CTV is a huge opportunity. That's really when you think of streaming TV and you think of connected TV. So smart TVs that are connected to the internet. This is a huge opportunity for the Trade Desk, and they are going to be a part of it. They also have the Solomar platform. It's a new version of Trade Desk that Green, the CEO, is super pumped about. This allows advertisers to input goals and use artificial intelligence to get better experiences and be more targeted to their customers. They also announced that 10-to-1 stock split, which I think could actually be a catalyst. As you know, if you take a pizza, you cut it into 8 pieces, you still have 1 pizza. But people like to buy stocks when they're lower. And it's a mental thing. You want to own more shares. So it shouldn't necessarily cause a stock to rally when there's a stock split, but the reality is it does. And so you might see a pop. You know, NVIDIA also announced a stock split recently, but the Trade Desk is doing a 10-to-1 stock split. So a $500 stock doing a 10-to-1, that's going to make it more affordable. The other thing is it actually changes the options. You think of options, you need 100 shares per contract. So when you do have one of these splits, it can impact the options market. So that's something to consider. Now, if you look at this, their market cap right now, if they're priced about $555 a share right now, their market cap is $26.4 billion. Okay. Now that's about 114 PE ratio. You don't necessarily use a PE ratio when you're evaluating a stock like the Trade Desk. So let's look at it a different way. So the revenue is going to be about $1.14 billion this year. That's about a 23 price to sales PS. Now that's not cheap, but this is a high quality company. It runs about a 30% EBITDA margin, about 80% gross margin. And the average analyst actually estimates 27% growth for the Trade Desk. I think this stock could easily be a 5 to 10x, a 5 to 10 bagger over the next decade. I am long. I personally, my opinion, I think it's an opportunity even at $550, much better below $500. Now, keep in mind that several analysts have downgraded the stock and lowered their price targets. So there could be some volatility around this stock still, but I do like this as a long-term hold. I think that they're going to be a huge part of the secular growth trend. It's one of my top 25 conviction picks, and I am long on the trade desk. If you like this video, please hit the like button, drop me a comment, subscribe to the channel. Thanks for your time and attention. Have a great rest of your day. Take care.